Today on the CEO Barbecue, we're looking for gold in Oregon together with Provenance Gold. If you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Provenance Gold is listed as PAU on the CSE in Canada, where the average 3-month volume is at about 320,000 shares. The stock's 52-week high is 40 cents and its 52-week low is 8.5 cents. With about 140 million shares outstanding and a $23 million market cap today, this is a 16.5 cent stock with a 50-day moving average at 19.3 and a 200-day moving average at 22.5 cents, which means that it's now trading below both of them. No in-depth company overview needed here, though, as I normally do, because Rano was on the barbecue just a couple of months ago where we went over the basics, incentives, insider ownership, some of the geology, a bunch of other stuff in between. So for those of you who haven't watched it yet, I'll link the company's playlist containing all the previous conversations that I've had with Provenance in the description of this video. So please go ahead and check that out. That all said, though, it is time for me to shut up now, and Ron will let you do the talking. But first of all, thank you for being here.
Oh, thank you for having me. And people should not get excited by what we put out because it has helped us to adjust our geology thinking for a very good reason, and that is a very good thing for the long-term project.
That's actually a good opener right there, because I think it'll be a good update today because that's exactly what we're going to be talking about. You've had some drill results, and looking at them, I'm not seeing the grade that I expected based on last time when we spoke of what I expected. So what's really going on here? Talk to me about what you're seeing.
Okay, yeah. What happened in the initial drilling? Well, first of all, we had two-phase, a different problem that contributed to this, and that's that we had a serious delay in the actual assay results coming back from the lab because we were in the middle of a funding and we were not we didn't allow ourselves to see the results, which would have impacted that funding. So the original drilling was based on a geology model that our modeling geologist had based on our drilling of the first high-grade zone. If you remember the high-grade zone that everybody was excited about, it's steeply dipping. Well, we expected all the other structures on the property to also be following that and be steeply dipping. They aren't. That's where we got surprised because our initial drilling was on that assumption. And what we have found now, and we are actually starting to confirm this model, is that the first area is a steeply dipping feeder zone, basically a plumbing system that, in fact, I'll use an analogy here because I used to work in geothermal, and this is a geothermal cell or cells that created this deposit as well. A normal cell will have a main feeder cell of the hot water, which in the case of one I'm thinking about in Oregon, was a rangefront fault. As the fluids came out, they spread out along any fracture that has permeability, any unit that has permeability, like a tree pattern with branches spreading out, with the trunk being the feeder zone. And in this case, we have something very similar. Area 1 is one of those trunks, and it's one of, I think, of a forest of trunks. But what we were expecting to find out there away from this was a bunch of little zones dipping down. Instead, they are modestly dipping, and the modestly dipping zones were missed by initial drilling that we expected to be, deeper, going straight down. Now that we've modified the model and tested it, it does two things for us. It refocuses our drilling much more accurately, but just as importantly, it actually expands the amount of ounces in the system, because instead of having these narrow zones that are dipping steeply, they're pancake layered now, and the total ounces in an area go up. What we have done now with our drilling is we have confirmed the existence of half-gram type zones that are extending out with higher grade places in those zones, by the way, a long ways, and probably connecting to other feeder zones that are the higher grade, high angle zones down south in Herman, possibly off to the west in what we call Zone 4, and other places on the property. And I think this pattern is going to repeat across the entire diorite. So it's actually opened the system up. What we have seen with our drilling now is people are going to expect better drilling results in the future, but they should not be alarmed for a different reason as well. The real point of this program is to establish a large economic resource. And the majors that have talked to us that's what they're interested in. They're not interested in high-grade flash in the pan type results. They're looking for bulk tonnage. What we have now is that developing bulk tonnage, and if you step back and look at the volume that you can arm wave, it's an arm wave until we put it into a detailed resource. There are obviously, to me as a geologist, several 100,000 ounces in this first high-grade zone at multi-ounce. I think we're going to repeat that pattern in these other areas. Yeah, but in between, there is a large volume of half-gram type mineralization. The average grade of an open pit in the world, Nevada being an example here, is about half a gram. So it's very attractive. And if you look at it from a different standpoint, the cost normally of producing one of these tons, or I should say getting the gold out of a ton of gold in an open pit, is maybe $6-7 a ton. The gold values in half a gram are way above that. So there's a profit margin that makes the half gram Nevada mines very economic. And if you look at any of them and their bottom line, those are very attractive. In our situation, we have the feeder zone area that will get capital payback in a very short time. And then we're off and running with economic bulk tonnage until we get the next high-grade feeder zone. So that's and one more thing on that, and that's that if you looked at a map, which we have, and in fact, in that news release that we put out, if you looked at the map that showed the area that we're working in, it was a tiny square in a big land package. And that big land package covers El Dorado West only. Within that, we know that there are other areas of major placer mining historically. The diorite body that's the host and source is exposed in those areas. And we're just scratching the surface on volume in Area 1. And the El Dorado East will be a different talk because it's a bigger package with much more historic mining activity and mineralization in it. So long story short, what we had happen with this early drilling program was a refocusing into a new model that is much more realistic than the first guess of a bunch of little zones standing on end. And we have used that new model to start proving up that it is a much more accurate model. And the net result is we're going to have a lot of ounces over a very large open-ended area. Okay, that's a long-winded description right there.
It is, and there's loads to get into, and a couple of things to depict there, Rana. But you obviously make a good point that what potential buyers of this asset, and this is very forward-looking, of course, but what they would be looking for is to make money on those ounces. They don't necessarily care about the absolute grade; they just want to make money on it. Makes sense. What kind of grades are realistically mineable in this type of setting in Oregon, though, where you are specifically, and what would you be basing that on?
Well, it's in an area that is very much like Nevada. And if you use Nevada as a model, as I said, the average mine is about a half a gram. That's it. And they're making a very good profit on that. Their average operating costs are not a whole lot over $1,000 an ounce. So you look at the spread on that. That's why the Nevada companies are very happy. In our situation, I expect similar costs. It's similar geology, a similar terrain, everything. And by the way, those costs get carried to weird places like Alaska, other places in the world where it's much tougher. You would think the costs would be skyrocketing above that. No, the costs are about the same. And the values of gold that are economic are about a half a gram. And in those mines, what happens is if you're mining a zone, call it a half gram a zone, and you have removed stuff that is down to even a tenth of a gram as part of your mining operation to access that half a gram, that rock goes into a separate pad. It doesn't go into a waste pile. And the reason is that you can recover more than the cost of producing that and putting it on the surface out of that tenth of a gram rock as well. And that's what all the mines are doing right now in places like Nevada. They're actually mining rock at even less than a tenth of a gram for that reason. But bottom line, half a gram is extremely economic. This looks like it can start in multi-gram with recoveries that are better than the average Nevada mine from early testing. And that is an important item right there.
Mm-hmm. Permitting is part of the process as well, part of the what might be different. And you and I have talked about this before because it is Oregon, and you've explained to me that you're on the eastern side of the state, which is different than the western side of it.
Right.
But so if you're thinking about a heap leach, though, it's still, that's kind of a touchy subject almost everywhere in the world, right? So would you see a heap leach still working out, even though it's Oregon?
Oh, definitely. Not only can you use cyanide in Oregon, if you use that, and there's no prohibition, and you're going to see that down the road. But you can also economically recover from early testing on this using gravity and flotation. And there are other elements, or I should say other recovery agents than cyanide that can be used as well, which some companies are using. So as far as Eastern Oregon, the political situation has strengthened rather than the other direction over the last several months. Trump has prioritized Grassy Mountain as a streamlined project for development through the federal agencies. The state is very supportive of development of a gold mine run properly and safely and environmentally friendly like Nevada in Oregon. So it's not an issue. The cost should be very similar to what we see in Nevada.
Right. And again, all of this is basically forward-looking, and we'll talk about that more down the road as you advance as well. I do see, though, Ronald, that the primary hosts are carbonaceous shales. Wouldn't that pose a prog? Wow, this is me trying to pretend that I'm smarter than I really am and saying words that I normally don't say, but a preg-robbing risk. Wouldn't it be an issue?
Preg-robbing. Okay. Yeah. Okay. Yeah.
Yeah.
Not really. One of the things that I think is important with the host environment, by the way, the carbonaceous shales also occur in Nevada and those deposits, and they're handled quite easily. But one of the reasons that this deposit exists, I think, is the fact that we have that black shale that it invaded, the diorite invaded. because it triggered precipitation of gold out of the fluids. And the reason that you have the high grade deposits in El Dorado East that we acquired historically, including one, for instance, that was confirmed by drilling in the 1980s to have an open-ended 170,000 ounces at 23 grams. That was at that time. That's what was reported in the news. Anyway, the reason that those bodies exist and our mineralization exists may be because of the precipitation triggered by the host rock that the diorite fluids came into.
Yeah, that's the fluid part of it is interesting to me as well, because it also I'm starting to think about other stuff, regarding metallurgy, maybe staying on that topic as well. Mm-hmm. Is there any indication of sulphide encapsulation where kind of the sheets that you just told me about earlier steepen east, I believe?
No, actually, what's funny, one of the reasons, by the way, that I'm tying the El Dorado diorite to El Dorado West diorite, to the El Dorado East diorite, and to a bigger zone than that, is that the metallurgic characteristics are very similar. And what they had in the old mines in El Dorado East was about 50% free gold, and free milling gold, they called it. And they had excellent recoveries using gravity and flotation in the 90%. So that's a possibility. The bottle rolls that were done on this material showed recoveries of up to 85%. We call it equal to or better than Nevada normal heap leach operations, which also impacts the economics rather dramatically. There's no encapsulation that we have seen. The gold came in after the main pyrite and alteration event happened. It was a late stage, lower temperature event. And to underline that, in the core that we took last year, you actually saw visible gold pieces replacing mafic minerals with no encapsulation. That creates the free milling when it weathers and also when you grind it. There's no encapsulation by silica either. There wasn't any noticeable silicification in these areas of the gold mineralization, which is a puzzle. I don't understand it, but normally you'll get silica encapsulation as well. And there's not a lot of silica or silicification in this system.
What is that? Is that telling you anything about grade potential at depth, though, the fact that there's not a lot of silica?
Not really. Well, actually, for an open pit, I don't care. We've carried the mineralization down. I'm sorry to put it that way, but we've carried the mineralization down to 200 meters from the surface and beyond, and the grades held up to 288 meters in core hole 1. So how deep can you take an open pit? And you've already created a much larger volume than the historic volume that was projected using rotary drilling that only went down to 100 meters. So I'm not sure that I answered your question, but I don't think it's going to impact the fact that we have a major multi-million ounce system that spreads out over a big area.
How deep you can take an open pit, I suppose, depends on the geometry of your ore body there, and that's something that I do want to ask about as well. But just one more thing before we continue on, does any of what you're telling me about right now about the metallurgy, does that coincide? Do like chargeability highs? Do they coincide with lower grades or higher whatever arsenic values or something like that? Is that something you've looked at already?
We haven't seen a whole lot of obvious correlation right now, except that the fluids demagnetize the diorite in places in the gold mineralization event, which means that if you go to magnetic deterioration in the diorite body, you're better you have a better chance of finding good gold mineralization. The one correlation we've seen that seems to click for me right now is case bar. You start seeing potassium alteration, and that really matches the gold pretty well.
Yeah, that's actually interesting when we talk about deposit models as well, which is something I'm hoping we can talk about as well toward the latter part of the conversation. Going back to that geometry, though, what percentage of the reported intervals here do you think is true thickness? Because again, that's not in the news release. What would your best estimate be?
Well, based on our angles of drilling and projections, I'm going to guess that the true thickness is just as one of those things. It's going to be a good 70% and maybe better even, because we're hitting at pretty good intercept angles.
Yeah. When do you think you're going to announce that, or when do you think you're going to know that for sure?
As our model is confirmed, we can announce that. But also, by the way, those thicknesses and comparing them is more important in a vein system where you're looking at one high-grade zone. In this case, we have multiple zones and bulk tonnage, and it's the strip ratios are going to be more important than thicknesses of zones. And right now, the strip ratios are looking pretty promising because an awful lot of our mineralization starts at surface.
Okay. That's so. I was because the follow up would be, generally where I want to take the conversation is what else can you tell me about the geometry and the orientation of the mineralized zone right now? Now that you're putting a bit more holes into it.
Okay, what we have found is, first of all, let's step back let's step back a ways. First of all, the overall package of a gold system in the area follows a major east-northeast trending structural zone that's a few miles north-south and extends all the way from our area to the Idaho border, maybe beyond. Within that, there is a diorite body that has roof pendants and not just roof pendants, but floating sections, I think, of the country rock on top of the diorite. And that system right now has been broken up in two ways to allow plumbing to form, for the gold system when it was working in the diorite. One is the structures, the east-northeast trending structures. There are also north and northwest trending structures that were all pre-mineralization, that were host environments that created the fractures for the gold mineralization. Another component that's become very clear now with our work is that when you put a diorite body into a series of sediments, especially black shales, their structural behavior in any kind of stress strain pattern is going to be to create a lot of fracturing at the contact, because they're going to behave quite differently. So you have a massive diorite pushing up and uniform, and you've got all these shales that are just on the edges. Well, those edges are the host for the high-grade ore bodies in El Dorado East to date. And those edges are also combined with the pyrite in the black shales, great places for gold to drop out of solutions, find the fracture host areas and drop out. So that's a long-winded explanation. But anyway, we have host areas that are created by faulting. We have host areas that are created by the contact between the diorite and the country rock. And we're following up on those. And where we find them, we seem to be finding gold.
It does seem to be kind of elongated, though, on the pictures that I see in the news release that you've provided. Does that worry you in terms of the strip ratio? And again, this forward-looking, but yeah.
Not really, because if you look at not just the high grade, the average 3-gram area, that was pretty close to 100 meters across, and we don't know the length of it or the details of it, but that forms a pretty good beginning of an open pit. Then you look at what the wall rocks on any kind of step down open pit are going to be. Well, the wall rocks are going to have a lot of zones of half-gram type mineralization. And as I said earlier, if you're moving that stuff out anyway, even down to a tenth of a gram, you're going to put it onto a recovery pad of some kind. And a very large percentage of that a rock away from the 3-gram area is in that category of strongly mineralized, and it's going to provide additional gold resource. Locally within that, we've been finding some high-grade little areas in there that can be separated. I don't know if you've ever been through one of the Nevada gold mines that's operating. What they actually will assay basically on a daily basis the faces, and they will designate where the rock is going. Is it going to the mill? Is it going to a leach pad? Is it going to a secondary leach pad? Is it going to the waste pile? And that way, it's a very efficient way of getting maximum recovery versus cost in those situations. Again, long story short, it's going to be easy for an open pit to go down a long distance because of the volume of 3-gram average material. And then the side walls are going to be allowing it to go even deeper because they're economic in that operation. I don't know if that got too long-winded and complicated, but long story short, yes, you can go very deep.
Well, Rono, I've been out of my depth the moment we said hello, so it is
Okay.
almost everything is complicated for me, but that's kind of a me problem, not really a ye problem. Pit wall stability in that case, because you said it would be a good, a good point for starting off the mine. What is the what's the competence of the rock there? Is it strong enough essentially to keep to carry the pit slope here?
Oh yeah, and there are very tight regulations on pit walls, and you start doing rock mechanics studies to make sure. And so a pit that's really shallow will have a much steeper pit wall because mechanically that's stable. You get the deeper you go, the flatter the whole operation, the pit walls have to be to accommodate the possible failure. And in this case, you can. It's not a dangerous situation because it's very much regulated by the governmental regulatory agencies, and B, by the studies that every company does on pit wall stability and engineering. Mm-hmm. To that note, I was at Chuquicamata in Chile years ago, where they had a major pit wall failure on one side that was obvious for not paying attention to those rules. Yet they mined through it and around it, so it didn't pose a major hurdle to the mine.
Mm. Well, really why I'm asking this, or where I'm coming from, even though it is forward-looking and too early really to talk about that, is kind of trying to get an idea of how mineable could potentially this thing be. And also because I do note that in hole 24, you terminated that due to what you called bad ground. What exactly happened there?
What happened there is we had a bladey a rock, from joining and stuff, and soft rock in between, which was probably near surface alteration of fault gouge. And basically, it was causing a problem. It's not going to be anything to do with pit wall stability or anything like that. It was a mechanical problem within the drill hole. They kept fighting that rock that was coming in at a. Let's say the rock was like that and the drill is going down, that bladey aspect of it keeps jamming in there and causing problems for the drill penetration. We finally just said, enough of that, let's just step over and drill the different hole, which worked fine.
Okay. How's the, it's actually good to hear that it's that. I thought it might be something to do with water. How shallow is the water table here?
It's variable, but it's normally at about 100 meters, and it'll be quite handleable in any kind of mining operation. Some of the Nevada mines, for instance, run into groundwater at a much earlier stage, and it's handled very inexpensively by pumping. And again, all of the controlled pumping is tightly regulated for environmental protection, et cetera. And in this case, it will not be any kind of a problem for the mining operation.
Yeah. Well, Okay, 100 meters does sound shallow on when you think about it at first, but it is something that there's other places in the world that I believe deal with less. Some at 40, 50, even in Africa. So I have seen that. Bottom line, Ronald, what I'm getting from you here is that you're not worried about these results. You actually seem to be happy with what's come out of the ground. Market seemed not so happy with the results at first. You traded a lot of shares before the news release, a couple of days, and then on the day of the news release, pretty high volume there and a bit of a drop in the price. I think some of that seems to be recovering right now as we speak. But do you think what happened there? I mean, do you think expectations were too high, or what's causing the drop? And of course, how do you fix it?
Well, that's not in my bailiwick, but in talking to our guys, what they said happened is there were a bunch of people that bought on that first, high grade core hole, and they were waiting for more of the splashy news. Instead, they were getting meat and potatoes news away from that first plumbing system, and they dumped because of that situation. The people that recognized what we were doing stayed in, and they started buying back the shares at a new low price that they think is a great bargain at this point. And that's what's going on right now. The people that are knowledgeable are recognizing what we're doing and understanding the situation and acquiring. Well, the people that came in for a quick pump and dump have been departing, which I think is a long-term healthy thing for the company.
Hmm. Is that something that do insiders have the ability? I suppose you have some assets pending right now, so you don't have the ability to be buying on the market now.
Yeah.
But do you have the ability and the desire, you and other insiders, to be on the bid supporting the stock price?
No, I stay away from that completely. On one note, I can tell you though, on my uh, confidence in the company and the project is that my son, for non-company reasons, needed to sell his shares that he had 500,000 of, and he was going to sell them to somebody else. I stepped in and bought all 500,000 shares because I thought it was at a price that was a bargain and going to get better. And I'm not planning on selling, but I did acquire those so that we had extra control on that aspect.
Mm-hmm. Talking about those assays, what else do you have coming? Where in the project is it from? And when do you think we're going to see those assays?
Okay, we've drilled 17 holes to date right now, and that news was on the first 10. We are still in most of the holes are still in that intermediate area, trying to find out what's between the area 1 feeder area and heading west toward the area 4 and south toward the Herman feeder area. So. I'm expecting to get more results that are adjusting to the new model over the next couple of weeks. And in the next 2 or 3 weeks, I don't know how quickly after that we can turn out the news, we're going to be getting results from the Herman area.
Okay.
The Herman area is our next area that we think has a feeder system in it. And I'm expecting that that news should hit in September, October, and be at a good timing for very good news.
But those holes were essentially predetermined. It's not like you saw what was coming out of the ground and then went and drilled the other 7 holes, or because you said they're drilled with the idea of this new model essentially that you're working with, or how were those holes drilled?
Well, actually, these holes were predetermined right now for the pattern of infilling and stepping out. With the new model, what we're doing is we're starting to adjust our drilling as it goes along, and we have a planned program right now that is testing the Herman area. Then we have some holes planned up to the north to test that west area that we think may host another one of these feeder systems. And as a geologist, I had to throw in an area that IP showed up to be a really interesting target on the way by. And so we're testing that as well. So we do have the next several holes planned right now. They're part of the expansion program. We got a new permit for 17 new pads, stepped out quite a bit further than the original. And we are no longer limited to doing that modest step out. We can do some significant step outs to our mineral system. And I wish I had that map that shows this area that we're working in compared to our property position, which has plastering and all kinds of evidence to suggest that the mineral system extends, because you would understand that it's a postage stamp on an envelope.
The interesting part actually to that is that some of the step out holes that I do see on that map, they seem to be coming closer to the property boundary. What if the system dips outside of your package? What's outside of your package? What do you do then?
Well, we have two things on that. First of all, the property owners on the sides have expressed willingness to deal. But when we looked at it, first of all, our drilling program right now is going into the interior of our property because we like that area. To the west, I think it extends to the west, it extends to the east. But the most interesting mineralized part of that whole belt that I was talking about earlier is that area covered by El Dorado East. And we picked that up when it became available right off the bat, because now we control that. And at our leisure, we could actually develop, assuming everything goes the way that we expect it to, a mine could be developed on each of those two properties without acquiring anything else. But in a long-term operation, obviously, somebody out there is going to confirm that deal with the ranches, and it'll all connect.
Okay. From the coming holes that you have here, the 7 holes that are still outstanding, is any of that twinning of any historical holes, or it being close to it? Where are they in relation to any historic stuff?
Well, the first Herman hole is close to a historic hole, but it extends way past that historic hole. So we're testing the area, and the others aren't. We're testing targets that are outside of the twinning situation into virgin ground, which I like. But yeah, the first hole in Herman was a sort of twinning for the upper part of the hole, but then we continued it past it, and a long ways past it.
Okay. And it's going deeper, though, I assume, as well.
Yeah, the historic hole went to 425 feet, and we went to, I think, 910.
That's what is that, 300 meters ish? Yeah.
Yeah.
Okay. Well, maybe to summarize here, what you've told me so far, what is it that you'll be chasing from now on out? Like, how do you package it nicely that even someone like myself, 75 IQ, can kind of make sense of it?
Well, I first of all, I doubt that a whole lot. But anyway, what we're doing right now is establishing that we have a major gold system. We're doing the metallurgy testing coming up to confirm the recoverabilities are going to be excellent. We are going to do it on a systematic pattern spreading out from Area 1 in El Dorado West. And that is going to be a major expansion because we see signs that we can do this over much larger areas than what we've been working on so far. At the same time, we have started doing mapping and sampling, but mostly mapping and geophysics on El Dorado East and extensions of El Dorado West. We're going to be, we have started the permitting process. In fact, we've submitted the permits for El Dorado East right now for drilling. That drilling program may not commence until next spring on El Dorado East because of timing of winter coming and what we're doing on El Dorado West. But it's going to be a systematic expansion of a major gold system that we've just started on right now that I think is going to be better economics than most open pits in the world, better grade than most of the Nevada type open pits in the world. And I think we're going to be attracting a lot of attention as this progresses. I don't know if that was an answer, but that's, yeah.
You do seem to be getting a better handle on what the system Might be. Is it too early to call it a reduced intrusion system, or is it starting to look more like a Carlin? Is it something else? What's your best guess right now?
Well, I don't compare it to one of the things I've learned is every system's unique. And in a case like this, where we had a diorite that I think is associated with a subduction zone, which is a very specific type of diorite body, coming into a carbon-rich shale environment, it created its own system, and especially because we had a lot of gold. The fluids were so strong, by the way, as an aside, that in our core, we actually had visible gold that replaced mafic minerals with no silicification, no encapsulation in the rock without any visible means for the fluid to reach that place. So we have a strongly gold enriched, highly fluidized diorite coming into rocks that are trying to drop gold out of solution because of the carbon content. And I don't know what system I can think of anywhere that I've seen that quite fits that model. It's a big diorite that has segments of roof pendant on top and roof pendants within that were part of the process.
Hmm. So,
So,
is the assumption that they're? Oh no, go ahead.
It's a low temperature system that our geologist who's modeling thinks must be a distal part of some kind of a porphyry system. And I'm not going to argue with him on that, but it doesn't need to be. It's a low temperature system of gold mineralization that came in after the major alteration of that diorite. That major alteration of the diorite was pre-gold. Pre-gold comes in. After that, we had some faulting in the area based on a range faulting that came in later. But I can't put any other deposit that I've ever seen anywhere quite into this category. So I have to call it its own unique system.
Mm-hmm. So it's not because I was thinking how many intrusive pulses might have been here because it's obviously multiple, I think. But what are we really talking about here? And really, why I'm asking is because I'm trying to figure out how complicated is this thing for you and the guys in the team to figure it out.
Actually, there are some simple rules we're starting to develop. Gold is a good indicator. We're finding more. Potassium is a good indicator to take you to the gold. A few other things. But our geologist that's mapping right now has indicated he can see at least 3 major pulses of diorite emplacement in this. So it is a multi-pulse diorite, and it's going to get even more complicated because it's going to tie into the diorites to the east. So I think it's going to be interesting to try to sort out which pulses were most important to gold mineralization, but we're following the gold to begin with. And a lot of the world's mines were mined out before they ever knew what the system was. They just, the old engineers at it, get on her and stay on her, was follow the mineralization. And to some extent, that's what we're doing right now. We're following the mineralization. We're using these other controls to step out and find new high-grade spots within an area that has intermittent, constant mineralization.
How's money for you right now, or how is it going to be at the end of the program?
Well, right now, when we pay all the bills, we have about 2 million left for continuing the program. And at that point, you'll have to talk to Rob on how that money is best spent. But we're not concerned with what we have and what's going on, including what we're doing with our current in the lab results and drilling, that we can refinance and continue to expand, but we want to do it in the least diluting method. And obviously, we can't answer that question right now. We have some companies that have approached us, producers. We don't know where that's going to go at this early stage, but as we expand the footprint and volume of this thing, I think those could become more serious. I'm avoiding answering the question because I don't know at this point. Then Rob is probably the better one to answer that.
Well, and maybe just directionally, that $2 million, what else does it, or how far does it get you? Is what I'm thinking, mostly from the perspective of when are you going to have to raise money again? And also, this is worth pointing out is that you have some 60 million warrants, I believe, outstanding. There's over 10 million options. So what's the date on that? Where does that come into play?
Okay, I have to go back and look again. That's not my category right now, but this 2 million will carry us through this year's program. And obviously, if you think about it, then we have to do a refinancing after this year's program. I think the results will allow us to do that next raise at much better terms than what we might imagine right now. But it also opens the door to considering other options.
Mm-hmm. But essentially, you think you don't really have to go back to the market for a normal private placement this year. That would be, again, forward-looking, but that would be your expectation. Then that's
I don't expect that, no.
Okay, good. What else do you have coming up this year? Are you going to be doing any Met work or anything else in the meantime that's kind of maybe an in-between, but still an important piece of the puzzle?
Oh, very much so. We are setting aside samples right now for Met testing to confirm. We've already done some. The historic companies did Met testing, and we also have Met testing results that were described in the literature from the El Dorado East mines that happened out there, and they all point to excellent recoveries. So if you switch gears and look at this from an economic standpoint, I really like it. They had simple recovery methods, extremely good recoveries, and in this case, we would have quick capital payout from that multi-gram start area. And I think the economics is a better way in some ways to start looking at this property as well.
Yeah. Yeah, that's going to be a very important part of it as well. What else do you have in plan in terms of marketing in the meantime? I don't see you on the Beaver Creek list thing, so I suppose you may not be going to that, but what else are you going to be doing for marketing?
That's a question for Rob. He's handling that. I won't tackle that. But on what else we're doing mapping. We're going to do multi-element. We're doing some metal screens on this. We want to understand the details of the system. And I'm hoping that we get a chance to do aerial mag over El Dorado East because that will help us determine where the diorite bodies are hidden underneath those blankets of placer material out there.
That's also something you can do year round, if I'm not mistaken. So that's something you could do later on in the year, potentially early next year as well.
We can do it anytime. That doesn't get affected by snow cover at all.
Right.
So, yeah.
Okay. Good. Well, I'm starting to get a better idea. I think we're also going to be talking in the meantime. I'm asking you about raising capital and so on and so forth. You said you're expecting it to take you through this year. I'm sure we'll talk before the end of the year here, Rano. So what do you think is the most fair criticism of the Provenance story right now? What's something that, you talk to investors often? What's something that you hear and you're like, yeah, that's kind of true?
Yeah, I think it was that the most severe criticism we had was the results that were expected on this based on the early rounds. And the only answer to that is that we've adjusted the model and the system. The model that we have developed that is more accurate is going to allow a bigger system than what we had originally projected. And with apology, I think I've been worried about this. We called the Kennecott syndrome. And when I was working in management in Kennecott, we had the Kennecott syndrome. What that was Kennecott had the world's largest copper mine, this huge hole in the ground. And whenever a new project came up, they would always compare it to the Kennecott mine. And obviously, Bingham Canyon is a unique thing in the world, being the world's best. So when we did our first drilling out there and hit that 175 meters of 3 grams, while we were ecstatic, I was very concerned that we're going to go out from this first feeder area into all of that area in between that has average grade material until we find our next feeder area, maybe down in Herman in area 4. And people are going to say, "Oh, that's a major disappointment. We're not getting more high grade." Well, it's bulk tonnage, a very good grade. And if we had drilled those without the first holes that we drilled, everybody would have been doing handstands. Instead, they were saying that's not 175 meters at 3 grams, and that was the disappointment that people need to get over and realize we're at the beginning of developing a major new gold system with all kinds of good economic characteristics.
Yeah. What is going on in Oregon might be worth an update on, because I think that's where you live, right?
Yes. Oh,
yeah, I find just why I'm bringing that up is I found an article a couple of days ago. It says it's called Eastern Oregon Gold Mine Proposals 7 Key Impacts for 2025, and it's got kind of this big quote on the front page of the article. It says the gold mine proposal could impact over 10,000 acres of land, affecting habitats and local economies, unquote. And so it's a whole, it's a long article describing all of that, and then there's something about Knife River as well and the water there and stuff like that. Just kind of commenting on what's really happening in the Oregon, mining and exploration world. What are you seeing? What's happening on the ground?
Well, what I'm seeing happening on the ground is very helpful. First of all, I do talk to one of the advisors for Grassy Mountain, and everything is in place. They're going through the mechanics. They will have their final permit before the end of the year. They are doing additional drilling to start developing an open pit deposit instead of the underground deposit that they have completed the permitting on. They also, I was told by DOGAMI, Oregon's regulatory body, that they have a swarm of applicants coming in for drilling. There are several companies drilling different targets in Oregon right now, and they are expecting a flood of new activity in the state. We have finally reached that point where people recognize Eastern Oregon is open for business in the mining community. And I'm very happy that we are at the forefront of that. Right after Grassy Mountain, I think we have the most advanced project coming in behind. And that is a great place to be. You never want to be the number one because of all the trials and tribulations. But number 2 is a great place.
That's a first to be second type of thing, I suppose.
Exactly.
Is what you're getting at. Good. No, Ronald, this has been a good update. I think I've been through most of it. I'm sure I'm forgetting some stuff, and I'm sure that people listening to this will remind me of it so that I can ask you in our next conversation, what do you think I'm forgetting? What did you come here hoping to talk about that I failed to bring up?
I can't think of anything. You're pretty darn good at what you do, despite your own self criticisms.
Well, I really do appreciate you saying that, and I appreciate you sitting down with me. Thank you so much, Fitzy.
And thank you. Okay, always fun to talk to you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."